If you're receiving the age pension or any Centrelink payment, tomorrow could mean more money in your account, but only if you know what to look for. 4 critical changes are rolling out right now, and missing even one could cost you hundreds of dollars every fortnight. Stay with me because what I'm about to reveal could make a real difference to your financial security in the months ahead. Welcome to my channel, where we cut through the confusion and bring you clear, accurate information about Australian pensions and benefits. I'm here to help you understand exactly what's changing with Centrelink tomorrow, why it matters, and most importantly, what you need to do right now to ensure you're getting every cent you're entitled to. Whether you're already receiving the age pension, planning to apply soon, or helping a loved one navigate the system, these 4 changes are absolutely crucial. So let's dive straight into what you need to know. Tomorrow marks another indexation date for Centrelink payments, and this time the changes go beyond just the standard cost of living adjustment. We're looking at 4 distinct changes that will affect different groups of pensioners in different ways. Some of you will see automatic increases. Others will need to take action to benefit. And for some, these changes might actually create new opportunities you didn't know existed. Let me start with the most significant change that affects nearly every age pension recipient across Australia. The payment rates are increasing once again, and while we've become accustomed to these regular adjustments, this particular increase comes at a time when every dollar counts more than ever. The maximum base rate for single pensioners is rising, and couples will see their combined payments increase as well. But here's what most people don't realize about these indexation increases. The amount you actually receive depends not just on the new maximum rate, but on how your income and assets are assessed. This brings us to the second critical change, and this one requires your immediate attention. The income test thresholds are shifting, and this is where things get interesting. The work bonus scheme, which allows pensioners to earn additional income from work without it affecting their pension, is being adjusted. For those of you who have returned to work part-time or are considering it, this change could mean the difference between keeping your full pension and seeing it reduced. The work bonus currently allows you to earn income from employment, with the first portion of those earnings not counted under the income test. Tomorrow's change increases this threshold, giving you more flexibility to supplement your pension with work income. But you need to understand exactly how this works, because if you're not tracking your work bonus balance correctly, you could be missing out on payments you're entitled to receive. Now, the third change is one that's flying under the radar, but it could be the most important for many of you watching this video. The assets test thresholds are being adjusted to reflect changes in property values and the cost of living. This is crucial because Australia's property market has seen significant fluctuations, and for pensioners who own their homes, the way your primary residence is treated versus other assets can make or break your pension eligibility. What's changing tomorrow is the threshold at which your assets begin to reduce your pension entitlement. For homeowners, that threshold is moving higher, which means some pensioners who were previously receiving a part pension or no pension at all might suddenly become eligible for payments or see their payments increase. If you're currently receiving a reduced pension because of the assets test, tomorrow's change could give you breathing room. But here's the catch that trips up so many people. Centrelink doesn't automatically know about every change in your circumstances. While the rate increases and threshold adjustments happen automatically in the system, your individual assessment depends on the information Centrelink has on file about your specific situation. This is why the 4th change is perhaps the most critical of all, even though it's not a policy change, but rather a procedural one that affects how these updates are applied to your account. Starting tomorrow, Centrelink is processing a massive wave of reassessments to align everyone's payments with the new rates and thresholds. This sounds straightforward, but here's what you need to understand. If there are any discrepancies or outdated information in your Centrelink file, the system may flag your account for manual review. This can delay your payment increase by weeks or even months. Some pensioners won't receive their increased payments until these reviews are complete. Others might find their payments suspended entirely if Centrelink identifies information that needs updating. Let me give you some real-world examples of how these changes play out. Imagine you're a single homeowner receiving a part pension because your assets are just over the threshold. With tomorrow's increase in the assets test threshold, you might now be entitled to a higher payment or even the full pension. But if Centrelink's records show an outdated value for your car or your bank account balances from 6 months ago, you won't automatically receive that increase. You'll need to provide updated information. Or consider this scenario. You're a couple, and one of you returned to casual work last year. You've been diligently reporting your income every fortnight, and your pension has been adjusted accordingly. With tomorrow's work bonus increase, you might be entitled to earn more before your pension is affected. But the system won't automatically recalculate your previous fortnights. You may need to contact Centrelink to ensure the new rules are applied correctly to your ongoing payments. Here's another situation that affects thousands of pensioners. You've been receiving the maximum rate of age pension for years, with no income or minimal assets. Tomorrow's rate increase should flow through automatically, and for most people in this situation, it will. You'll simply see a higher amount deposited into your account on your next payment date. However, if there's been any change in your circumstances that you haven't reported, even something minor, the system might hold up your payment pending verification. This is why it's absolutely essential to ensure your details are current right now, before these changes take effect. The income test changes are particularly important for pensioners who are still working or considering returning to work. Under the previous rules, many seniors found that working even part-time reduced their pension so significantly that it wasn't financially worthwhile. The adjustment to the work bonus scheme is designed to address this issue. With the higher threshold, you can now earn more from employment before it starts to affect your pension. This is excellent news for those who want to stay active in the workforce, either for financial reasons or simply because they enjoy working. But you need to understand how to maximize this benefit. The work bonus accumulates when you're not working and can be used in future periods when you do earn income. If you haven't been tracking this carefully, you might have a substantial work bonus balance that you're not even aware of. Conversely, if you've been working consistently, you need to know exactly where your balance stands so you can plan your work hours strategically. Starting tomorrow, with the increased threshold, your planning calculations need to be updated. Now let's talk about the assets test changes in more detail, because this is where many pensioners either win or lose significant amounts of money. The assets test looks at everything you own except your primary residence, including your car, savings, investments, and any property that's not your main home. The test works on a sliding scale, where your pension reduces by a set amount for every dollar of assets you have above the threshold. Tomorrow's threshold increase means that ceiling is moving higher. For some of you, this will result in an immediate payment increase. For others, it might mean you're now eligible for a pension when you weren't before. But here's the critical piece that connects all four of these changes together. Your pension entitlement is determined by whichever test produces the lower payment, the income test or the assets test. For many pensioners, it's the assets test that limits their payment. For others, it's income. Some people are affected by both. When these thresholds change, as they are tomorrow, your limiting factor might shift. You might have been on a reduced pension because of your assets. But with the new thresholds, the income test might now be the limiting factor instead, or vice versa. This is why it's so important to understand your complete financial picture and how Centrelink assesses it. What should you do right now to prepare for these changes? First, and most importantly, log into your MyGov account and review all the information Centrelink has on file. Check that your bank account details are current, your address is correct, and your reported income and assets match your actual situation. If anything is outdated or incorrect, update it immediately. Don't wait until after tomorrow. Getting your information right before the changes take effect will ensure your payment adjusts smoothly without delays or complications. Second, if you're working or planning to work, familiarize yourself with the work bonus rules and check your current balance. You can find this information in your MyGov account under your payment details. Understanding how much work bonus you have available will help you make informed decisions about employment opportunities without accidentally reducing your pension more than necessary. Third, review your assets and their current values. If you've sold a vehicle, spent down savings, or had any other change that reduces your assessable assets, make sure Centrelink knows about it. The assets test threshold might be increasing, but if your actual assets have decreased as well, you could be entitled to an even larger payment increase than the standard indexation would provide. Fourth, be aware of your payment dates. The rate increases take effect tomorrow, but depending on your payment schedule, you might not see the new amount until your next regular payment date. Don't panic if your account doesn't show the increase immediately. However, if your next scheduled payment comes and goes without the increase being reflected, that's when you need to contact Centrelink to find out what's happening. If you're currently not receiving the age pension but think you might now be eligible because of the threshold changes, this is the perfect time to apply. The increased thresholds mean that some people who were previously just over the eligibility limits might now qualify. The application process takes time, so starting now means you won't miss out on payments you're entitled to receive. For those helping elderly parents or relatives with their Centrelink matters, make sure they're aware of these changes and assist them in checking their information if needed. Many seniors aren't comfortable navigating MyGov online, and they might not realize that their payments could increase significantly if they just update their details. Your help could make a substantial difference to their financial well-being. One final crucial point about these changes. While I've outlined what's happening tomorrow based on the scheduled indexation and policy adjustments, individual circumstances vary enormously. Some pensioners will benefit greatly from all 4 changes. Others might only be affected by 1 or 2. And a small number might find that, despite the threshold increases, their specific situation means their payment stays the same. This doesn't mean the system is wrong or that you're missing out. It simply reflects the complexity of means-tested payments and the fact that everyone's financial situation is unique. The most important takeaway from everything I've explained today is this: knowledge is power when it comes to Centrelink. The system is complicated and it's constantly changing. But by staying informed and proactive, you can ensure you're receiving every dollar you're entitled to. These 4 changes rolling out tomorrow represent a significant shift in how age pension entitlements are calculated. And for many Australian seniors, they'll mean real improvements in financial security. I hope this breakdown has helped you understand exactly what's changing with Centrelink tomorrow and what you need to do to benefit from these important updates. Remember, the key steps are checking your MyGov information right now, understanding how the income and assets tests affect your specific situation, and staying informed about your work bonus balance if you're working. If you found this information valuable, please give this video a like and subscribe to the channel for more essential updates about Australian pensions and benefits. I read every comment, so if you have questions about your particular circumstances or topics you'd like me to cover in future videos, drop them below. Tomorrow's changes are just the beginning, and I'll be here to help you navigate every update that affects your pension. Thank you for watching, and I'll see you in the next video where we'll dive deeper into maximizing your age pension entitlements.